Kaustubh Pawaskar, FMCG analyst at Sharekhan. Kaustubh is here to discuss the new kid on the block, the listing of Avenue Supermarts, which has been very strong, still trading with a premium of nearly 100%. Kaustubh, thanks so much for being with us at NDTV Profit. The issue was oversubscribed 100 times. Was this to be expected, the kind of listing it got?
Yeah, it was expected. Basically, if you consider the overall financial performance of the company and all the parameters in terms of peer comparison, I think this company stands at a top if you compare to some of the other companies in the retail space. So, considering that, I believe that it was one of the strong opening for the listing of Avenue Supermarts.
Right. What about investors that were lucky enough to get some shares allotted to them? What should be their strategy? Is it a good time to book out, or do you think from here on they can expect even better returns? If you think that the fundamentals for this retail player are better than the others, would you then remain invested, or would you look to book profits?
See, we believe that it is a company from the longer term view, because if we consider the performance for past 5 years, there is a consistent improvement in the operating margins. Return ratios have been strong, upwards of 20%. Company has a very steady balance sheet, and one should expect that from here the company should perform well, considering the fact that considering its expansion plans, considering its opportunity of getting into the other markets in terms of enhancing its retail space or the reach. So all these parameters, considering that, we should expect a better performance to sustain in the coming year.
Right. What do you think will be driving their earnings? The IPO proceeds are going to be used to reduce some of their debt. How much, elbow room will they have for expansion? Because so far they seem to be dominant players only in the western part of India. How much do you think is there room for expansion, and does that strain the bottom line in the near term at all?
See, expansion, obviously they are planning to expand, but its strategy is basically to expand into one particular state, add number of stores into that particular state, make those stores profitable, and then get into other territory. So I think this is one of the better business model for the company, and I think gradually they will cover they will be a pan-India player, but it is not going to happen immediately. We should see it happening in another over the period of time.
All right. What would you then do with some of the other retail stocks that moved up on the buzz surrounding, with the listing of DMart? Their financials don't mirror what DMart. So they moved up. The stock prices moved up. Do you think the entire sector is due for a re-rating, or that would be premature?
So it depends on the company to company and how they are going to perform. We should expect if things are improving from current level, if footfall improves and this company's focus on improving its fundamentals store wise, I think we should expect better performance from all the companies in the coming years. But that is the strategy. It depends on the company to company. If we see consistent improvement in the fundamentals of these companies, I think we should expect the re-rating in the overall space. But overall, it depends how things move, what are their expansion strategies, how they are planning to expand in the coming years, and what would be their product mix, how the operating efficiencies, how it will play for them, and the balance sheet size of the companies, all this how the debt equity ratio is, everything matters, and that would be the key indicator for the entire space.
But for many of the other retail companies, profitability has been a little bit of a worry. Of course, there have been one-offs like demonetization and things that they have not been able to predict. But the fact that we are moving to a GST regime, there will be a shift from unorganized to organized sector. Do you think the tide will lift all boats? And you would see better performance some of the other competitors to DMart?
See, if you compare these companies with DMart, if you see, most of the companies have low single-digit operating margins. Vis-a-vis compare with DMart, it is about 8 to 9%. So first of all, they need to improve their operating efficiencies and how their revenue mix or how their same-store sales would improve in the coming years. So if that consistently improves for most of the companies in the coming years, I think that will add on to their overall bottom line, and that would be the key trigger for most of the companies in this space.
Right. Also, let's talk about the consumption pact. Do you think that Avenue Supermarkets can trade like a consumer company? A lot of people are saying that it's trading at 50 times compared to Asian Paints in terms of the new listing now. Do you think that is justifiable?
See, it depends, because if we consider the past five years performance, the company's performance has been commendable. Considering the fact it into the retail space, 8 to 9% operating margins, return ratios upwards of 20%, stable balance sheet, even the cash flows are positive. So if the fundamentals are similar to what the consumption stocks are, but what will be the performance in the coming years, that we need to wait and watch. And if it consistently performs, I think it should get better multiples in the coming year.
Right, but can a retail company do that consistently?
See, there are a lot of things into it. It depends on the business model, how the operating margins improve from the current level, because already it is at about 7 to 8% operating margins. From current level, what would be the levers that would drive the operating margins? That one has to watch. What would be his expansion strategy? How many stores it will be adding in the coming years, and how each stores would be profitable in the coming years. So all these factors would come into play. And the most important factor would be the macro environment. If macro environment is better and if it sustains in the coming years, I think that should drive the performance of the.
Right. Also, can you just talk about the consumption pack? What's happening over there? Do you believe markets are expecting a strong Q4, and that's why some of the durable and consumption names are seeing a rally?
See, Q4 would be much better than Q3. I'm not saying that it would be better in comparison to what the H1 performance was. I think demonetization was whatever the impact we have seen in a larger impact of it seen in Q3. But obviously the things have improved than what it was in Q3. I think Q4 would be another quarter where the performance would be little subdued, but we should expect better performance from Q1 FY 2018.
Right. And don't you think that GST can play a spoil sport?
Sorry?
Don't you think that GST can impact that growth in the near term in Q1 or maybe Q2?
See, GST would be another kind of a speed breaker for maybe another quarter or two, but most of the companies are molding themselves into the GST regime, and I think GST is positive for the consumer space or consumer durable space from the longer term view, because a lot of factors would come into play. The competition with the non-branded stuff would reduce. Company will have a pan-India market where they can explore themselves. So there are a lot of long-term positives of GSTs for most of the consumption companies.
Right. In terms of ITC, do you think that can be one of the biggest beneficiary of GST with the way it is being proposed? You don't expect any major problems in ITC?
See, ITC already there is a cap on the cess as per the government indication, and what the government has indicated that in the near term the whatever the current excise plus VAT rate that would be maintained, and it would be increased over the next 5 years. So they have already they have already put a cap on the cess, but I do see increase in the tax rate in the coming years.
Right, so there's no reason for any particular re-rating at this point of time.
See, obviously the discounted valuation is something which is looked into the ITC. If you compare it to the other biggies in the FMCG space, ITC is trading at a discount, and the fear in the market was that in this particular the rate would be significantly higher in the year one of the implementation of the GST, but that is not the case. I think increase would be there in the tax rate, but it will happen gradually.
So what will be your top picks in the FMCG pack?
So your topics are Britannia, HUL, ITC because of the discounted valuation, and Emami. And I believe all these companies would, have a positives from the once the GST is implemented.
Right, so let's start with each one of them. In Britannia, what is the call? Despite the recent run-up or the run-up that we've seen in the last 5 years, you would still want to buy that name?
Yeah, we have a buy recommendation with a price target of 3,750. I believe that it is one of the better picks in the FMCG space. The company has consistently shown improvement in its operating performance over the past 4 to 5 years. Okay, now there would be impact on the profitability because of the increase in the raw material prices, but the improvement in the revenue mix, expected improvement in the volume growth would drive the performance in the coming years. Also, company is planning to expand its portfolio. It is planning to expand its non-biscuit portfolio as well. So these are some of the levers for the company from the longer term perspective.
Right. Let's also look at Emami. Don't you think Emami is one of the biggest threat for Emami is competition? The way Patanjali is coming up, don't you think it can impact the volumes for Emami in a big way?
See, Patanjali is a threat for the entire space. Obviously, it is not a threat, but obviously it has opened a space for most of the companies into the herbal and Ayurvedic space, which most of the companies are looking to enter. Emami already has a well-established portfolio. It has a good value-added hair oil portfolio. It has a health space, health supplement space where it is doing good. So I think it has a well-established portfolio, and I think that will help the company to expand its business or revenues in the coming years.
Right. You also like HUL. What's the call over there? Do you think that underperformance or the range that it is there in a while for now will now tend to overcome, or it will now tend to be better?
See, obviously, company is now focusing on improving its sales volume, because in Q3 and in Q2 and Q3 we have seen a decline in the sales volume. But obviously, triggers are there because we are expecting rural India to see better quarters in FY 2018. And even the urban consumption is expected to improve. So I think that should drive the HUL's volume in the coming quarters, but it is not going to happen in Q4. From Q1 we should expect gradual improvement in the sales volume of the company.
Right. Thank you so much, Kaustubh, for taking out time for us. Always good to get a perspective from you.